Welcome, ladies and gentlemen. This is BetterTrades coach Robert Roy. Welcome to the market recap for this week. This update is being done after the close of Friday, November 14th of 2014. We're going to do a little bit of an outlook for next week as well as look back historically at what's happened. So let's go ahead and jump right into our disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you that you should buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. Okay, so let's get that out of the way. And let's go ahead and take a look at the S&P 500. And I just went over this in the Market Insights I did. And guys, in the Market Insights, we talked about, if you look at the last couple of days of the S&P, we have all of these doji type patterns, and we have that very small bodied candle pattern right before it. Yes, we're staying up in that range of the all-time highs, but realistically, there's a concern there. We do not, at this point, have a lot of strength showing in the pattern. Yes, we're above the 8, which is the pink line. So from the trending pattern, we're okay. We're getting closer to it. Could this be a resting period after the big move? It's very possible. A concern or a question of, do we really want to make and see the break above? Again, very possible. But we don't have a clear decision just yet to the S&P. So although I am bullish on the market, I am watching very closely the candle pattern as well as the 8-period moving average to see what does it do next. So with that, let's go look at the VIX. All right, the VIX is kind of the same thing. The bodies are bigger than the S&P was, but the pattern is sideways. It's up, it's down, it's up. It's really not a lot going on. All within that tight range that we have there of 1260 and 1430. So fairly tight area, and these are key support areas in the past that we're looking at. All right, so let's go look at one or two stocks from today. Visa is one of the stocks that we looked at. Now, guys, from a perspective of how do we trade this and why, the mechanics of everything we do with this are what we did in the Insights. So those of you that are in the Insights, go check it out. Make sure you watch that video today. But we're bullish on Visa right now. Yes, I see the sideways pattern, and I'm looking at this almost as a giant flag pattern that's going on, right? Here's our flagpole right in here, and then here's our flag waving, right? So almost a giant flag pattern. The problem I have is I'd like to see it close closer to the 8, which gives me a very tight range with that 249.41 right above our heads there. So there's a little bit of caution has to be thrown into the wind there to consider this position as a bullish trade if we do get the bounce off of the 8 because of that 249.41 and the distance from the 8 will be by the time we finally enter the trade. So we've got to take this one cautiously if we take the trade at all. Now, one that we did take was Google. Right, and I'm just going to make an adjustment to the chart for a moment. Okay. And we took a bearish trade on Google at this point, and we took it aggressively. And we've got a series of rules, which what aggressively basically means is this. We wanted to be in the trade, but we don't want to be in the trade with a full lot. There was just too much risk in the way the trade was setting up. So we wanted to possibly participate, but we did not want to take the trade at this point and take it aggressively where we took a full lot, a full size. Right now, 555 is where the stock is at, and the 8-period moving average is at about 557. So it's only about a $2 move up above there. So you've got a little bit of room, but you've got to give this one some wiggle room to get and make its way. We've already exited out of part of our trade, guys. We've already pulled the trigger on part of this position, exiting out. We bought a smaller lot of contracts, and we've already started to scale. So you're a little late to the party to try to take advantage of it now. And if we're right, great. We're looking at a move to come down here to 546 and then 536. And if we're wrong and it pops up, we're underwater of a very small dollar amount, but we participate in the trade. So make sure you come check out what we did in the Market Insights, guys. If you're unfamiliar and unsure what to do with that, by all means, if you go back to the robertroytrader.com website, go ahead and look under the video that's marked Market Insights, and it'll give you a mini Market Insights of exactly what we do. So with that, ladies and gentlemen, we're done. Have a wonderful day. God bless, and I'll see all of you at the next update. Take care, folks. Bye.